Welcome to this TFD Initiative member meeting. This is how we call it now, member meeting instead of user meeting. We really want to give advanced information to the members of TFD Initiative, including our XDC community members. And I see many of them joining us today. This session is recorded for those of you who need to leave early or who know people who want to access the playback at a later stage. Do not hesitate. We will share the recording via the usual channels. This is a session I have announced a few months ago, actually. And thanks again for your patience and feedback. Sometimes impatient, some of you, certainly on the XDC community side. There was much interest in this innovation, and I understand why, because as I qualified, I think this is the most advanced innovation we have in trade finance. And one of the most interesting ones, there are so many in digital asset space. I would also say it's the most advanced one from my perspective, but there are so many innovations in digital assets that sometimes it's important to separate those who have a real impact versus those who are still to be proven from a value perspective. And definitely here we want to show how we apply digital asset to have a real impact on the economy, starting in a small, very niche way, but expanding gradually for sure. So this member meeting, we are going really to focus on the Trada token, the release of this token that we have announced around early March, and this is why this session was planned initially in April. But as you will understand, this is a very complex innovation, not only from a technology perspective, but most importantly from a legal and policy and regulatory perspective. And so there's so much to share that we thought we would cover that innovation specifically today, and we will leave the additional TFD Initiative product roadmap items we want to share for a later meeting. In order to provide you the best expert I can find on the XDC Tech, I have invited Niels Billing to this session, who is the co-founder and CFO of TradeTech. And as you know, TradeTech is a founding member of TFD Initiative. So welcome, Niels, to this session. A pleasure to have you. And although I have been very much engaged in this as well, I'm also very keen to listen to your presentation on XDC Tech and the Trada token. So I suggest we go and listen to Niels. Please prepare your questions via the chat or verbally, because you can unmute yourself. But in order to respect Niels' presentation time, I would suggest we all remain muted during the presentation itself. So if that's a good agenda for everyone, I welcome Niels on stage now.
Thank you very much, Andre. Excited to be here and excited to be talking about Trada and the recent STO issuance that we have done on the XDC network together with our partners at XDC and Zinfin. And let me share my screen. Please tell me if you can see this. I have put together a brief presentation to take everyone through what we have done, what's going on here. I think one thing I have to say in advance, and that's what the lawyers told me to say, is that this is not a financial promotion. It's not marketing for Trada. If you're interested in Trada and what's going on, you can go to the website of XDC Tech. I'll give the address in the presentation, but it's xdctech.io. There you can see all the relevant documents, legal documents, and also the relevant disclaimers. So with that bit of legalese out of the way, I would say let's dive right in. Everyone is aware of the term crypto winter. There has been quite a lot going on in the crypto space with negative publicity. Coins have crashed, significantly decreased in value. You will have heard of Celsius or Three Arrows Capital. a lender and a fund in Singapore, respectively, that quite spectacularly exploded. Voyager, another crypto lender that exploded. All these had in common that they promised the users exorbitant returns, sometimes up to 20% return on a what they call risk-free basis. They claimed that the assets of the investors, the investments were insured, were guaranteed by federal regulation in terms of Voyager, the FDIC. All these things turned out to be not true. And now we're dealing with this crypto winter. So many of you might ask the questions, why are we launching a security token here, and where's the value in this? And this is exactly what I want to explain, and also make clear that this is the right time, absolutely the right time to be doing this, because what we're here doing is creating real value and taking real assets on the blockchain, combining the world of trade finance with the world of crypto, and really presenting a very exciting offering. So to understand a bit better why Trada token as a securities token is different and what it does, it makes sense to take a step back and look at how traditionally trade finance assets have been bridged and brought out to institutional investors. And on this slide, you can see a little flow. We start on the left with trade finance instruments. Let's say this is a pool of invoices. Those come from originators. These could be banks or non-bank originators who do the selection, they do the pooling, they do all the underlying work, servicing of the assets and the underlying borrowers. And we at TradeTech have then been taken these pools of assets and have, through repackaging in a node, been able to transfer them basically out to the market, to institutional investors. These notes are issued, in our case, in TradeTech's case, out of a Luxembourg vehicle. They settle through Euroclear or Clearstream, and that's what the CSDs here signify, the centralized securities depositories in custody accounts of the investor. And so it's all very conventional. It works very well. We have seen and continue to see very much growth in this space. We are issuing notes almost every week on this basis. But it's still, I would say, the old world and the world where there's a lot of manual processes, a lot of interaction between several counterparties who have to do their bit in order to effect the transfer from the asset on the left to the institutional investor on the right. And I think that's another point to mention. This type of transformation is very much limited to institutional investors. This is not a market that is open to non-institutional investors, to retail investors, and pretty much anyone else who wanted to get involved in this space. Now, moving on, and what we have done, and this is what the Trada offering is about, is we have looked at how can we widen the participation of investors, and specifically non-bank investors, non-institutional investors, retail investors in this space. And as you look at the slide here, you'll see that a large part of it is very much like the previous slide. The parties, to a certain degree, a certain extent, are the same. But on the one hand, we have replaced the note with a regulated security token, which is a security that, however, and that's the other large difference here, settles on a blockchain, settles through a distributed ledger. And the other important change is now this means that not only institutional investors, but also retail investors can access this product. So maybe just a little refresher, what is a distributed ledger? Many of you will know this. For those who's not, this is not clear. It's basically a transaction record that is held and synchronized through a network. The network participants who have access to the ledger are called nodes, and the ledger is synchronized between those nodes. So although there is a single source of truth, and a single version, I should say, not a source, but a version of the truth, this version of the truth is distributed throughout the network, and everyone who's a participant in this network has the ability to confirm and view this version of the ledger, and that brings certain benefits that I shall be talking about in a moment. But effectively, what Trada does is opening up trade finance as an asset class to non-bank investors and allowing them through a securities token offering to participate in this space. So a bit more about the Trada token. As I said, you can find all the information on xdctech.io, the website. Trada token is issued by XDC Tech AG. That is a Liechtenstein-based special purpose issuer. We have chosen Liechtenstein as an issuer because issuing a jurisdiction because they are extremely advanced when it comes to blockchain regulation. The local regulator, the FMA, the Financial Markets Authority, is highly experienced in this space. They have good precedents dealing with these matters. They're also very responsive. Then lastly but not least, Liechtenstein, of course, is an EEA country. They have a very strong general legal framework. They're very experienced in financial matters. Liechtenstein historically has been a banking hub and financial hub in Europe. So for us, that was a clear first choice when looking where to issue the token. The token then itself, Trada token, is issued as mentioned at the beginning on the XDC network as a security token. So it is in fact a regulated security. So what you will find when you go to xdctech.io is that we have produced a prospectus that has been reviewed by the FMA. There is all the requisite accompanying documentation, key investor document, summaries in various languages. And so this is a securities offering in effect in form of a token that settles through a blockchain and can be sold throughout Europe. Now, what are the benefits of doing this, and why is this potentially more advantageous and more advanced than just the regular notes? Well, I talked at the beginning a bit about the CSDs, and that's one large part. It's not the only part, but it's one large part. The whole process of settlement of a node in the traditional environment versus settlement through a distributed ledger on a blockchain. So again, taking a bit of a step back, where did security settlement come from and how did it develop? Well, initially we started with selling securities in paper form. And pieces of paper got passed around, and I give you the money, you give me the piece of paper, and then I have a bond, you have the money security settled. That turned out not to be very efficient, moving around paper. So we moved to global settlement. We moved towards settlement through the CSDs, someone like Euroclear or Clearstream, who would effectively do away with the need to move around paper. But that doesn't mean that there's not many steps involved. If you have a security that settles, typically there is a delivery lag and there's a payment lag. These two lags have to match. You need custody accounts for that. You have to put in matching instructions in security settlement systems, and all these things are manual steps that can fail. Another point is that because everything runs through a CSD, the CSD effectively controls everything. They control the settlement, they control all the records. They are not only the single version of the truth that they produce, but they're also the single source of truth. That again has potentially knock-on effects if their error has been made. And then last but not leastly, automation is another issue. These steps are, of course, better than sending around paper, but they're still not fully automated. There is still a lot of manual work that needs to be done. There's still a lot of emails being sent around, phone calls being made, and if you've ever been involved in settling securities, you know that this can be quite a cumbersome process. So now looking and comparing this and contrasting it with selling through a blockchain is that because everything goes through a distributed ledger, you increase transparency, everything is visible for, and in this case of Trada, we're dealing with a permission network, so only certain parties have access to the information. But everyone who hacks and all the nodes in the network, all the nodes in the network have access to the information. So you immediately increase transparency. Because there are fewer steps involved in the settlement, the delivery of the node to the investor settles through the blockchain, settles immediately into their wallet. You have reduced cost and complexity. You also, because you reduce settlement times, you reduce risk significantly, because if you think about the T+2 settlement, which is the standard for securities, in today's world, there's still something that can happen in those 2 days, and sometimes things go wrong. And the quicker you can settle, the less risk you have things going wrong. We talked about the single source and the single version of the truth. By having multiple people access to the ledger and this ledger being immutable, there is no risk of the ledger being falsified or one party who has the sole access to it messing with it. And then one point that I also want to mention is the wider investor access. Not only will this product be available to institutional investors who have access to settlement systems, who have access to a custody account, but effectively now everyone who has access to a blockchain wallet and who can get KYC'd can buy this product. And the last point I think is very important to mention, and it's one of these things that comes up frequently when talking about crypto, is what about KYC? What about AML? How do you prevent that a security like this moves into the wrong hands, that the wrong people buy it, that it's money laundering or any other nefarious activity? So when issuing Trada, and you can see this yourself when you go to the website, anyone who wants to buy Trada, and that's generally true for any other security token as well, must be whitelisted, KYC'd, and AML approved. So what that means, as a potential investor, you will have to go and leave your details through the website with a KYC provider. We also do a liveness check, meaning you have to prove that you're a real living individual and not some bot who sends around passport copies. And once these checks have been conducted and it has been ascertained that you as an investor are not from some jurisdiction that maybe is under sanction or otherwise prohibited, only then will you be able to buy the token. And then again, it will settle directly into your wallet through the blockchain without delay. And you can benefit from all the benefits of holding a token that gives you now access to the real economy, as we call it, to the real world of trade finance, albeit in a token format. And then lastly, please allow me to give a bit of an outlook where we're moving with this. As we have discussed in previous sessions of the TFD Initiative, we started our journey as trade tech and Trada and XDC tech in the token space back in September 2021, when we first partnered with Zinfin to issue non-fungible tokens on the XDC network. Non-fungible tokens, again, many of you will think immediately about crypto apes or other art projects or cars that get tokenized. You're not too far off. What happened here is that we took an existing node, and please recall what I said about the node issuances out of Luxembourg, that we took an existing node and effectively wrapped it into a crypto format and settled it through the blockchain. What will become immediately obvious from this is why this already was a very advanced approach to settlement. Again, It involved several steps. It involved producing a note first and then settling it through the blockchain. But it's also clear that this is not really a scalable approach. So what we have done then, we have looked at how to scale up and issued native tokens out of Trada. And this is what we're talking about.
Let's start with the one from Francesco, who is asking in terms of retail and institutional investors, will the token be available in each country or limited to some countries?
Yes, thank you. It's a good question. So we start with certain European jurisdictions. So effectively, the offer is directed at Liechtenstein, Switzerland, Germany, and a number of other European jurisdictions. That said, we're doing it out of certain European jurisdictions that have been approved in the prospectus. However, if you are not in one of these jurisdictions, you can still, under reverse inquiry, buy the token. You will, however, have to declare when you come first to the website. You'll see where you're coming from, and of course, you have to pass KYC, AML checks, and all that. So, if you're from a jurisdiction that is outside, then unfortunately, it's not available to you.
Okay, very good. Michelle also had another question. Once you access the website xdctech.io and you choose the option that you're not an institutional investor, you cannot access the site anymore. Is there a workaround for this?
No, there is basically when you come to the website, there are certain questions being asked. There's either you're a qualified investor, and then you can enter the website straight away, or if you are not a qualified investor, then you have to say which country you're coming from, and if you are not one of the listed jurisdictions where we can offer Trada at the moment, then you can't access the website. Indeed. That's a function of this being a security and this being offered under securities laws.
Okay, thank you, Niels. And the other question was, can Trada token work as bonds?
It is effectively a bond. That's a very good question. So Trada is effectively a bond. It's a digital bond. It's a security. As such, it pays a regular interest, and that interest is also accompanied with an airdrop of XDC. So there's a certain allocations that get paid in XDC as well, but it is effectively a bond.
Yeah. Okay. And another question is also here. For Mario, if you buy Trada token with XDC, which is locked as collateral, so it's the investment indeed, what happens if the price of XDC over time goes up or down?
Yes, at this point, you can buy Trada with US dollars, or we're also implementing the ability to buy with stablecoin, USDT or USDC. And further payment mechanisms will be implemented in the future. I know the prospectus indicates that XDC is the only way to buy at this point, but as the question reflects, there's certain complexities, and it might be better to use a stablecoin to purchase the token.
Yeah. Okay. So we have two audiences here today: trade finance experts, but also the XDC community members. For the XDC community members, can you elaborate on the way the money will be allocated? What kind of instruments, what kind of financing methods are the originators using to extend the liquidity to corporates? What kind of trade finance instruments are we talking about here?
Yeah, we will invest the proceeds of the token into a portfolio of trade finance assets. It's effectively receivables that get purchased. They will be transferred to the vehicle, so the vehicle will be will have a true sale of these assets, and then returns of the token will be paid out of the income from these assets. So again, it works very much like a bond, a fixed income instrument, albeit in token format.
So, and there is indeed a credit insurance. So this is not a risk passed on to the Trada investor.
Yeah, we expect that the underlying assets will be credit insured, over collateralized. So in terms of the returns, this should be a good protection mechanism. I said at the beginning, if you think about the promises that were made by certain providers in this space, that were wildly exaggerated, and we're talking double digits here. This is a 5% target coupon with Trada, so it's a very conservative return. However, due to the collateralization on credit insurance, it should also be a rather safe investment.
Another angle for the originators, which are traditional financial institutions. What is the impact for them when benefiting from liquidity brought via the Trada token?
Yeah, as we can see, there is still a growing lack of trade finance in the market. There are various numbers that have been thrown out. From 1.5 trillion to 5.67 trillion trade finance gap that results largely from the fact that corporates and mostly SMEs that make up to 90% of the global businesses do not have access to the funding that they deserve and that they need. Of course, banks focus on the space. They do their best to serve their clients, but they're equally under pressure in terms of capital, in terms of regulation. So there's a huge number of corporates that remains underserved or unserved even. And this is where a product like this can help to get additional liquidity, additional funding to these counterparties.
Okay, very good. So on your last slide, you had a few next phases presented. So you're starting with a specific scope of, I think, 5 million.
Yes.
And when do you plan this to be expanded? Because it could be filled quite quickly.
Yeah, we're seeing good response to this offering, and I think people generally get what it's about and the benefits of it, and providing access to the real world, to the real economy through a security token product. So we're already working on the tokenomics of Trada 2, which will be a 2-token system that will happen later this year. We're working with our partners at Zinfin and XDC on that. And then the next step, and that will happen some point, I guess, mid next year, is that we will also be able to offer tokenization as a service for third parties, very much like what we do with the notes, where we do the repackaging as a service.
Very good. So more capabilities to be a larger pool as a first step, and additional capabilities for those who want to issue their own tokens to address their own liquidity or investment strategies. We have more questions coming in. It's very good. And it looks like the mute all is working fine now. So Francesco is asking, can an originator get in touch with XDC Tech team today to onboard receivables and benefit from the Trada token liquidity?
Yes, absolutely. So we're onboarding originators in this project. We're of course through our previous efforts of TradeTech, our TradeTech marketplace, and other initiatives, have a good and deep network of originators. But nonetheless, if you are or know of a potentially qualifying originator, then by all means, please do get in touch. And we're very happy to include you in this project if it makes sense.
Very good. Another question here on the regulatory side. So you're using the Liechtenstein regulation or framework today. Will you expect or will you require other countries to follow the Liechtenstein openness to digital assets in order to expand the product, or will you be able to continue expanding the product on the back of the Liechtenstein Foundation?
Yeah, there is a growing initiative to regulate this space. As you might be aware, there's the MiCA rules that will come into place in Europe. Proposal has been finalized, needs final approval now, but it's expected to come into place in 2024, and that will impose very strict regulations on crypto throughout Europe, especially on stable coins. Will treat issues of stable coins effectively like banks with capital requirements, but there are other requirements in this regulation as well. So we see there's a drive towards regulation. Of course, in the US, the SEC is very vigilant and moving in the same direction, so that the crypto space will become more and more regulated, and especially in the wake of recent events, there is also a real need to do that. And that's and goes back to a point that I made at the beginning. That's one of the reasons why there is a real offering here, and it's the right time to launch a product like Trada that is based on a prospectus that has been approved by a regulator. And Liechtenstein certainly is at the forefront here of thinking. The Blockchain Act in Liechtenstein is certainly a piece of legislation that can set a great precedent for others. But we expect certainly similar developments in other places as well.
Yeah, and from what we see in the UK, the Law Commission for England and Wales, after having worked on the MLETR for negotiable instruments, Sarah Green and her team are now very actively focusing on digital assets in order indeed to, I guess, follow the same openness to the crypto industry, at least from a technology perspective. So indeed, more regulations will surely follow that model. I think for the audience, what is important to demonstrate here is that within TFD Initiative, we have a number of technology providers that are basically enriching the portfolio of capabilities for trade originators. It could be banks, factoring companies, supply chain finance platforms, and other types of originators, and enabling them to access liquidity from third parties. Could be banks, asset managers, or non-liquidity providers like credit insurers, taking the risk, of course, and now retail investors. And the goal of TFD Initiative is really to provide the most comprehensive set of distribution mechanisms, and sometimes that requires indeed adding ancillary technologies, which is what TradeTech, as the main hub of TFD Initiative, has done with XinFin XDC network. You can't sometimes do everything with one single technology provider. So the combination of the two here is what makes Trada possible through the XDC Tech legal entity in Liechtenstein. And as you heard from Niels, we're going to continue enhancing the number of capabilities. And when the time is right, when the need is confirmed, we might add additional technologies in order to make this portfolio of distribution mechanisms even more comprehensive, even larger, and so that we can address more distribution requirements of trade originators. And at the end of the day, the corporates, clients of banks, of originators, large corporates, SMEs certainly, are the ones benefiting, because if banks get access to more liquidity and have more automation, the goal is, of course, to expand those benefits, to bring those benefits to the end customers of the banks, which are the corporates, and in particular the SMEs. So we are definitely focusing on the distribution space with TFD Initiative, but the indirect benefit, the ultimate benefit, is definitely to bring this liquidity via regulated financial originators, financial institutions acting as trade originators to the SMEs and the corporates. But definitely, as Niels explained, with Trada, a first version has been delivered with the limitations and the capabilities that Niels outlined. More is already planned and being worked on. And I think what Niels highlighted is the opportunity for indeed this new capability of TradeTech and XDC network to support third-party tokens. So acting as an operator, if I may say it this way, Niels, of third-party tokens, having their own scheme, having their own focus. Should I see those potentially the whole setup of XDC Tech able to support third-party tokens that define their own investment policies in the same way as we have funds setting up their own investment policies and attracting liquidity?
Yeah, it's a capability that we're still working on. So at this point, this tokenization as a service is not ready, and there is a lot of special legal intricacies that we need to work through. A large part of that is to have the right registrations and permissions and licenses in Liechtenstein. So it's something that we're looking at. The team is very busy on driving this, and we'll deliver the news as and when it's ready.
Yeah, definitely. So, but definitely we have more in the works. And I see another question here on the minimum investment required for Trada investors.
Yes, so Trada has a minimum investment amount of $100 and that's the amount that you cannot go below, but for multiple reasons it wouldn't make sense to do so.
Yeah.
So $100 can get you access to Trada if you pass all the requirements in terms of KYC and AML.
Yeah, for accredited indeed investors. So 100, I mean, this is a piece of evidence that the technology makes a huge difference, because indeed investing $100 as an individual investor through a notes issuance wouldn't make sense, I guess, given the costs involved, whereas here on the blockchain technology solution, it is definitely achievable. So very impressive indeed. I see a few more questions. Let me look. Yes, does this Trada token has anything to do with R3 Corda network?
Our blockchain partner is XDC for Trada, and so the answer is no. This is not an R3 project.
Yeah. Okay. Very clear. So very interesting. Thank you, Niels. If there are any other question, I'll raise them. But what I want to share in addition with our participants today is that we will cover this innovation at the ITFA conference in Porto, where Niels and Christoph and the team will be on site presenting this development to the ITFA, to the delegates present in Porto, which are mainly the ITFA members, the large banks, credit insurers, institutional investors, and lawyers. And will also be launching or sharing more information on the state of the rollout of the Trada token as investors are signing up. And as Niels said, all the information for those interested in getting more details and accessing the prospectus, more details are available on XDCTech with a Q.io, where you find all the regulated information as required for you to proceed in case of interest as a retail or a business investor. On my side, definitely this is ongoing because I want to be one of the first investors in the Trada token. So with this, I want to thank Niels for your sharing your expertise and the whole history about this this innovation that we have been announcing a few months ago, and that is now finally indeed available, and is very promising to see the additional developments that you're working on. So looking forward to more information in August, and definitely by the ITFA conference in Porto, early September. And if some of you are interested indeed in additional talks with the XDC Tech team, do not hesitate to contact the myself or the Trade Tech team via the usual channels. Niels, thanks very much again.
Thank you.
And thanks to our audience, TFDI members, as well as the XDC community today, and looking forward to engaging further with you. Thank you very much. Have a great day.
Thank you, everyone. Thank you. Thank you, Andre.
Welcome. Bye.